Now we're showing my screen. You guys haven't missed much. Don't worry. Thank you, Scott. This slide again is talking about how we onboard people. The webinars, we've got 4 webinars, including the one you're listening to right now. And if you're wondering who's talking at you, my name is Steve Gomez. I've been Trade Ideas user number 3 since 2002. Now on board with them to help them with the onboard growth and the parabolic subscription fast and furious. So 4 webinars a week, 1 on Monday, 2 on Wednesdays, and 1 on Thursdays. We now have Andy in the mix as well. He's going to start helping Jamie on Thursday webinars. So 4 webinars a week. The one-on-one sessions, when you subscribe to TI Pro, you are automatically eligible for what we call a one-on-one training session, which allows you to sit down with one of us and explain to us what you're looking for, what your goals are, what your objective is, and we can help get you in the right direction. We do recognize that this can be an intimidating program, but the good news is it can be an intimidating program because it's a very powerful program indeed. And then, of course, the flagship service that we offer for free is the live trading room with Barry. My mouse here is circling. It says online 299 people. That's kind of old. We were upwards of about 640, 650 people last week alone, and in the high 500s this week. And the feedback's just been incredible in there. You know, people are saying they've paid money for live trading rooms, and they're nothing even close to what they're getting from the community and from Barry, especially as the moderator and head trader in our live trading room. If you're not in the live trading room, I just got to ask you why. I'll pop a link in there for the live trading room later as we go on. But again, this slide is just a reminder to serve that we are here to help you guys, onboard you guys, and make sure that you get all the attention that you need to go off in your own direction. And again, just kept this slide in here to remind people on the AI on Holly, we've got a new risk on, risk off, and we'll talk a lot more about that. It's basically just a very simple mode. Is the risk on or is the risk off? And like I said, we'll talk a little bit more about that going forward. All right, so our agenda tonight, as we always do, we'll take a look at the market in terms of the SPY, maybe a couple of other items and a couple of other ideas, and see where we are, where we might be going. We'll look at the Holly AI recap, what went on in the AI today. It was a bit more active than it normally is in the last few weeks, especially. And again, go over kind of the risk management and how to define what might be a risk on day versus a risk off type of day. And then I've got a new alert for you guys. I think you guys are really going to like this because this is not one of the traditional crazy intraday super surge scalp day trade alerts. You know, for those of you that know me, I prefer more of a slow and steady swing trade time frame. And you know, I did a great job when we ran our Ditto Trade managed account, a mirrored account, I should say, of using swing scalping, which really slows things down. And I've heard a lot of people say, well, what's a good swing trading strategy? You know, Steve, I work all day long. I don't have time to sit in front of a computer. And what might be a longer-term strategy? Well, I think I might have something for you guys. So make sure you stay tuned for that because this is a good one. I'm really liking this one. And then the trade of the week, which is why we are here. The trade of the week this week was PayPal. We'll take a look at that and how it's doing. And then we'll set some price alerts. I've got, you know, maybe 7 or 8 price alerts that I'm going to go through, and a couple of them are going to be from the new washout bounce alert, which we will dive into shortly. And so that's it. Take a quick look at the performance of Holly. The green line being Holly back to January 1. You see the S&P got up to a rough start, and Holly did not. Holly was going up with a lot of short sells as the market was falling out of bed. And then it was a real good mirroring of the S&P here for the most part for the last 4 months. And then here's our Brexit event, and you can see Holly the AI wanted nothing to do with any type of risk involved in Brexit, so sat on hands. Cash was a position, and you can see in that line a bit more orderly semblance than the crazy volatility that the Brexit brought out. So we're working on bringing this to a more public forum, a more on our website, with a more detail and more interactiveness to try and really get a feel for how the performance is measured on our AI product. All right, that said, let's go ahead and minimize that. And I guess we don't have Andy yet, so I'll just keep on talking, and that's okay. I don't mind talking. Let's go to the SPY. What you guys are looking at here, of course, is my default layout. I will beg and borrow and seal some of the alerts on the windows on the channel bars, but I will wind up bringing them back to my home nest because this is where I want everything to be in my one default type screen. So, hey, I think I see Andy. Did you make it, Andy?
Hey, Steve. Yeah,
Hey.
I finally made it, buddy. Sorry about that.
Hey, first world problems. What are you going to do? So, yeah, I gave them a brief rundown of what we're going to look to do and talk about tonight, but you tuned in just in time here to talk about our market recap. And I will zoom out again to remind everybody what the significance is of these two orange lines. The top line was our all-time high in SPY, and the bottom line was basically the level at which was the level below it, for lack of a better explanation. 1, 2, 3, 4 times we got hung up there. Here we got hung up. And for the longest time, every time we got into this level, we retreated right back out of it. So we never really spent much time in this little margin alleyway here. So let me zoom in and remind everybody off of this incredible head fake off of the Brexit. A lot of momentum in this move as exhibited by the gaps that seem to show up all of these days. But we've run out of that energy and run into some big head supply up here. Probably wouldn't even be probably would be worth just actually creating another orange line here as our next upside resistance. So what can we determine from this? Well, I myself would have maybe liked to have seen a challenge to new highs a couple days earlier, but we don't have that. We still have the sideways action. But what we do have to go on here are these wicks. 1, 2, 3, I'll call that a half, 4, even this day, 5. The market wants nothing to do with closing on lows. And so we have a nice 3 o'clock buyer that steps in most days recently here and keeps the sideways action moving sideways and gives us still an open invitation to push above this orange line. So for me, the path of least resistance is still up. Basing it on a few things, basing it on the sideways action, basing it on 10, 11 or so days we have closed above this orange line. So that to me tells me it's probably not a head fake like we had this particular one day, closed and came back below. But Andy had mentioned in an earlier webinar, the more days you can close and hold and trade above those previous levels, the better. I have also said I wouldn't be surprised to maybe see a wash down and a test of that low and have that prior resistance become a current support. That's always still in the cards. But again, the bias for me is still slightly to the upside here. I'm trying not to predict, but from what I've seen over almost 20 years of trading now, what my gut tells me, this is just continuation, waiting and waiting and waiting for the crack in the ceiling to move higher. Because again, we've had numerous opportunities to sell off, and we haven't. We haven't given back hardly any of this giant move. And again, this was a giant move, so that's really still the path of least resistance. You got anything you want to add, Andy?
No, I mean you hit the nail on the head. That's just a sign of strength right there. When you make a move of that magnitude,
yeah.
A lot of people will argue, oh, it's getting tired, and it could be getting tired. But typically, 8 times out of 10, the move from this is higher because you've made that huge move, and now you're going sideways, and you can't even pull back, from whence you broke out, So that is a sign of strength. It could be getting tired. It seems like there is a lot of selling going on up here, but at the same time, seems like every day, looks like we're going to roll over, and then we close, in the mid part of the range or
stick save.
In that range still. Yeah.
We get a stick save in the last hour. Another thing I'm going to mention, this isn't quite a flag or a pennant or whatever. It's just kind of sideways action, but it's very much in the camp of what we would call a continuation pattern. Bull flags, flags, pennants, they are continuation patterns which usually continue in the direction from which they came. Well, here's the direction from which we came, and we still kind of fully expect a continuation pattern. Am I predicting? No. But I'm having an open mind that if it doesn't follow through, and in the back of my mind, if it doesn't follow through, you'll start to see an example of the stair steps up and elevator down. You might get usually when these things fail, unfortunately, they don't give us much time to react. It can be a large gap down and then just hit the bid for half the day and never even look back. So if this, if this continuation pattern here fails, it can be swift, to the downside before you even knew what happened, and that's what they call the elevator down, stair steps up and elevator down. And I kind of hope that doesn't happen. It's been kind of a fun ride here. I would like to see what Holly does in a bear market, but we haven't seen one of those in a while. So for now, we just continue to move with the path of least resistance. This market is still innocent until proven guilty to the upside. And I borrowed that from my good friend Brian Shannon, by the way, innocent until proven guilty. I can't take credit for that. Alpha Trends. If you don't know who Alpha Trends is, you should be following him. And you should probably buy his book too, because I feel his book is still very relevant on trading with different time frames. All right. So with that said, I think our next stop was to go take a look at the Holly recap. So let's take a look at Holly today. Again, what is risk on, risk off? And that going forward is going to be the basic mantra that you're going to hear the Trade Ideas team talk about. Risk on versus risk off. Well, we can toggle Holly's performance for today. And for those of you that have a copy of it, you could see the risk off, which basically means exiting when Holly exits, taking quick trades and booking profits. That's the risk off. The risk on mentality is, let's see what happens with Holly's entry if we hold it to the end of the day. And some days that works, some days that doesn't. Well, what days do risk on work? In my opinion, a risk on day is a nice trending day in the spiders. We didn't exactly have that today. We had a gap up and then quickly go negative and stay negative for a while, and then at the end of the day kind of a briefly stint to positive and then back to negative. So 4 red to green days, very similar to what we've been having the last few days. We are in a range-bound market. A range-bound market, guys, that goes back and forth from positive to negative, in my book, is going to usually be a risk-off type of day. And I might even add, if you look at your calendar coming into today, knowing that we had the Fed move, which is this lovely candle right here, zip to the downside, run the stops, and reverse back to the upside, that's pretty noisy. And if you've been around FOMC Fed days, you know that this is par for the course. So I would anticipate and I would expect to deal with any future FOMC Fed days as a risk off type day, because generally they are very volatile in the second half of the day. So with that said, today Holly had a nice little day on her own using risk on, which is the metrics that we do use on that daily chart. So it was not the day to hang on. It was the day to play a range-bound type of market environment, and that's what proved to work. A couple of things of interest, because people are always asking me, Steve, how do you like to use Holly? Well, a couple of things that came to fruition today that I do talk about is I really like to pay attention to the entries on the intraday and the daily chart. And you've heard Andy and I probably talk a lot about contrarian entries can really help you. The better the entry, the better the staying power. You know, how often have you guys bought the breakout only to be stopped out and then watch the trade go back to highs without you? I mean, it's almost by design, not literally, but it just feels like it's by design sometimes. So the only way to really combat that is to turn your brain into something that it's really not used to looking for. I'm going to click on, which one was it? It was, do you remember which one it was? Andy, the one that I really liked for
yes, you had a couple of them. Let me see. It was oh gosh.
It was Ruger. It was Ruger. Okay. It was Ruger. This is Ruger Smith & Wesson's competition. Looking at the daily chart today, we had a couple green bars behind us, but what I really like is the way in which the entry was taken. This blue arrow right here signifies this candle, and this blue tag signifies the price level. Now looking at this right here, the market opens up, pulls back down to yesterday's lows, tries to run the stops by a penny or so, doesn't really follow through. Is this something really that you guys, in reading all the books and all the typical type of traditional trading metrics, is this the kind of entry you'd probably take? No, and I would agree with you. I probably wouldn't either. But this is what I'm really getting a lot out of Holly, are these unusual type of entries that are statistically probable. I mean, as a trader, I know, and I see it all the time, they're constantly, they being a loosely knitted word, the market is always trying to shake you out of your position. And more often than not, they'll take you down to a level of fear. Well, no, this is yesterday afternoon's low. I don't want to go below here. And so anybody that had a weak hand below here, you basically got stopped out. But these can be the levels if you flip your brain upside down. And again, it's hard to see with the eyes, but Holly doesn't use eyes. She uses statistical probabilities in her back test. It's all numbers and quant. And the numbers in the quant say, hey, this is a bona fide solid strategy Holly says, I'm taking it. And again, I really like these kind of strategies for intraday trades. So my point is, if you're starting to see some of these that use support, is that you, or on support, they're traditionally looking for levels of to bid into areas that most people might be getting ready to hit the sell button and freak out and dump their position that they bought earlier. But Holly is using a great contrarian type of entry, and again, it's statistically viable. It's statistically proven. Let's take a look quickly here at that particular strategy. Buyers stepping in. Last night tested at 63.6%. Why am I not seeing any trades for buyers stepping in? On support, excuse me, my bad. On support was the strategy, and it was the highest tested strategy of the day at 70.7%. So that still means there's a 29.3% chance it doesn't work. But people, this is what we're trying to do, is put the casino odds in our favor. This is how MIT students approach playing blackjack, and it got them kicked out of the casino. But we don't get kicked out of the casino. The market is our casino, and these statistics are holding their own, and nobody's going to come along and say, hey, you can't do that. So you need to look at these strategies like you're playing with the house type odds, card counting type odds. They're not always going to work, but when they work, they're going to work. So that was one observation I had from today. I really like that particular trade using the on support. So anytime you guys see these contrarian entries where it looks like the price failed at taking out yesterday's lows, and that's the entry point, I really like those. What are the other ones I really like? I really like the trades.
With Ruger there, pulling up that 15-minute chart, I love that support going back to yesterday too, and that's what Holly was seeing. And look at that, where that had the big move. Where? Going back to yesterday, Steve, on the 15-minute chart. Yeah, right in there. Look at that support, and that's exactly what Holly was looking at. And Steve's right. I mean, this is not something you're going to be looking at with the naked eye. You're going to need something to show you, and that's exactly what Holly will do. And I love the own support. Any of the contrarian calls that Holly makes, I'm always got my eye on those.
Yeah, because it's kind of like having a person riding shotgun, just watching out for those types of setups. Because your eyeballs, I guarantee you, your eyeballs are not catching those. This is totally under the surface type stuff. The other thing I like are trades that are under $10. Fold was a really nice trade today, and I'm going to point out something of interest. Let me go back to Fold. It's actually, not only was it a Holly trade at 10:20 Eastern this morning on the long side, and it's under $10. It was also showing up on the trend change lubricant list, and there it is right there. So we have what we've been looking at a lot of the time, these trend change lubricant charts, very, very similar looking chart here, but Holly also took a trade in it, and I thought that was very interesting. I didn't realize it was in Fold, it was in the trend change lubricant at the time, till the end of the day, but it doesn't matter. Looking at this chart in real time, seeing this level right here that was cleared out on the daily chart. And again, you guys should be looking on the daily charts. Your very first thing you look at. Zoom out, start from a high perspective, and then zoom in. Get the bigger picture first. Well, this bigger picture was showing us that we had a nice clearing above this level of resistance for the last few weeks. Not only that, if you're using a single stock window, you can quickly look down and see, hey, this thing has a decent short float. It's 28.9, almost 30% short the float. So that would be something of use to know as well. So when Holly spits out a trade, I'm immediately looking at the daily chart, the intraday, what the short float is, looking at a few different things. What type of trade is it? Is it a support, contrarian like we just talked about? What's the market doing? So, I mean, there's a few different things that you can add in, but those are the types of things that I like to look at when these trades come out. So particularly in this case, 5%, if I sort profit by 5% here, this was the winning trade of the day. And more often than not, as you guys know, stocks under $5 and stocks under $10, they can rip off, 5, 10, 15% moves really easily in a short period of time. And so when Holly gets hooked up into a decent trade that's under $10, I'm also really taking note. And I think lastly, what really is of interest today is I've paired off the risk on column. Again, this is what Holly is tracking today with her exits, and I've juxtaposed it here with the risk offs to start with. Risk on is taking for the rest of the day. Holly really did demonstrate, some good exits today, the way it all worked out. Look at this. There was no stop hit. There was only one stop hit. Everything else was either reduced risk, which means just take an early exit because the trade never went positive, no point in taking it all the way down, and then profit save. Profit save is basically the trailing stop. The trade got significantly profitable at one point in time, but was not going to be allowed to give it back. That's what the profit save algorithm is designed to do. And then time stop. It's just basically Holly's shot clock expiring, time to get out. Those time stops, of course, were created by the back testing and the optimization that goes on in the evening that Holly does. But look at here on the downside as well. And again, I got to remind people, something you're never going to see is a giant albatross, a giant loser, a big hit, one that takes away all the winners. You're never going to see the AI do that. So every single day, Holly in risk off mode is demonstrating proper risk management. And today it worked out pretty well. This trade went lower, this trade went lower, this trade went a lot lower, and so did this trade. So, again, maybe the P&L wasn't, setting the world on fire today, but as Dan always says, the way to use this AI is you have a statistically perfect, unemotional, non-human trader sitting next to you, always doing what's in the most highest odds. It'd be like sitting next to Zach Galifianakis there at the Las Vegas table in that movie. Oh God, I forgot the name of the movie. Help me out, Andy. The Las Vegas, never mind. We'll call it Rain Man. It's like sitting next to Rain Man at the card counting table. That's all Rain Man does, is play the odds and play the probabilities. So that's really the way that Holly needs to be approached. All right, so enough of Holly, and again, just want to remind you guys, Trade Ideas is the only company out there that is offering an artificial intelligence tool to the retail masses. Yeah, there might be some interesting proprietary stuff and some hedge funds and some other Wall Street firms, but they don't leave the building they're in, nor do they see the time of day. So we're really priding ourselves in not having any competition yet. I'm sure some is soon to come, and we'll see how well they do. But Trade Ideas is the only company out there that's going to offer you this type of tool to sit next to a statistically perfect trading mechanism.
I'd like to add something there, Steve, regarding the risk on and risk off. I remember sending Steve at 9 a.m. today saying, well, this is going to be an easy one because if you look at the spiders, basically the opening print of the day was basically the high of the day. We opened up and on the 15-minute chart there, you could see we opened up and just came straight down. We never even got near that high again. And when I see action like that, because a lot of people sometimes are confused, well, when do I use risk on, when do I risk off? Well, when you see a gap up like that and you come straight down in the first 30 minutes and you haven't gone back to highs, that's telling me right there, probably going to be in risk off mode unless this market can, break out of its range. And there's ways to use charting and your own trading expertise. You got to put your trader hat on when you're trying to figure out what to do. But when I see that, the gap up and just come, pretty much straight down and never really got near that high again, it tells me, probably going to be a risk-off day.
Yeah, not to mention if you knew the Fed was coming up later in the day. Yeah.
Exactly, yeah.
All right, so let's move on a little bit to something I've been working on. Well, here's a great example. Steve, myself, speaking in the third person, I've been trying for many, many moons, and I might be getting closer here, been trying to identify something on the daily chart. What I'm showing you here is on the intraday chart, but this is like a really nice bottoming tail washout wick here that came during the Fed market meeting today. I'm trying to identify this type of candle on the daily charts. And why is that important? Because again, a lot of people are asking me, Steve, how do you slow trading down? How do I do it if I can't sit in front of my screen all day long? Well, if I can try and find some of these type of daily candles, usually, and you'll hear Barry in the live trading room say, it looks like a bottoming tail or a topping tail. Bottoming tail is just fine by me on a daily chart because usually that can mean we're getting ready to move forward with maybe a few days of recovery, kind of the dead cat bounce, the washout, whatever you want to call it. So that's why I created this alert window, and I'm calling it washout bounce. Now, I could have created it as a top list because it's something I kind of want to monitor at the end of the day and see what might be looking good to pay attention to the following open, maybe set some alerts, and we're going to set some alerts examples on how I do that with this particular scan. But I also wanted to put the information into an alert window. An A window is the alert window, and these are the only windows we can backtest. And I wanted to really get a feel for how this thing might backtest for a few days of hold time. which is very different from what we've been talking about all along, you know, holding for 45 minutes, holding for an hour, holding up before the end of the day. No, this is something that is looking to hold for 3 or 4 days. And it gets hard, I can tell you from experience in Soak and Andy, we both spent hundreds, if not thousands of hours trying to backtest and look for really good swing strategies that might perform well over the course of a few days. You know, the more time you go out from the entrance, the more noise that can come in and the more slippage and slop can detract from what you want to see. But this is going to be interesting. So again, I could have done it with a top list, but I didn't. I did it with an alert window. And to make an alert window, all we need is an event. In this case, my event is a 5-minute high. So let's go through the filters here real quick, and I promise I will share this with you guys because I know you're going to want it, but it's always good to at least know what you got first before you take possession of it. So again, 5-minute high is all we're looking for the event. That gives us a price stamp and a time stamp, which is what we need for the 2 data points to go back and back test this sucker. But it's a pretty simple setup. Price from 1 to 500, change from the close. I've got it cranked down. If we click this little button right here, it'll basically tell you what it means. The price was down at least 0.01% from the previous close. So what I've done is I've capped off anything that took out yesterday's highs. These things all still need to be negative on the day, but what I want to see is a giant reversal tail. And so what I'm doing, first thing, is I'm saying, well, position in today's range. I don't want to see these alerts unless they're at the 95 percentile of their range. So in other words, 5% away from making a new daily high. Anything below that, I won't see it. So I want to see stuff that's reversing. But I've also got to figure out how to make that stuff show as a long candle. So I'm going to skip down to today's range. This is expressed in percent. So this particular, any particular stock is going to have a range from high to low, and Trade Ideas is going to average that range and know exactly what the average range for that particular stock is going to be. But in this case, since I'm looking for long bottoming tails, I need something that's got a large range. So I experimented with a few different settings, and 100 is basically what I came up with. So today's range has to be at least, on the minimum, the high end of its average range going back. Hopefully that makes sense. You know, if the average range was 50 cents, that would be 100%. So I'm looking for stocks that have at least their average range, 100%. The high end of their average range has to be my minimum. I just threw this in there just to make sure we're not, you know, looking at stuff that's, you know, death spiral. So change from 200-day moving average. Basically, this is a 1.01% change. All it's saying is anything that comes through this scan better be above the 200-day moving average, and if it is, that's all I need to know. And lastly, the average daily volume going back 5 days. These are all stocks that had to have been trading at least an average of 200,000 shares by the end of the day. So let's take a look at a few of these and get a feel for what this particular scan is looking for and how we might use it. And I may even just go ahead and set a couple of price alerts here as we go. So as you can see, I've got the history laid out here. The history is going all the way back till about 6:30 this morning, 6:45, which is 9:45. And let's just start. At the beginning of the day, this HCA popped in. Well, here's the candle. I need to zoom out a little bit on this one. Matter of fact, I'm just going to start with the dailies because that's all I really am caring about. I mean, this is interesting. It had a nice gap down, but what I'd really like to see is HCA by the end of the day close near highs, because this, at the end of the day, is where these alerts start to take shape and start to form. So never really got to where I wanted it to be because it closed back down. It's got a wick on the high end, a wick on the low end. That's not really what I'm looking for. But EQY, this is what I'm looking for. This is exactly what this scan is looking for, these bottoming type tails. And so looking at the daily chart here, we've got a daily chart that's not looking too bad, I'd say. It's in the higher end of its range, and it looks like it was getting ready to maybe make a new high, but it first wanted to back up and dump out a few people on stop loss hunt. And this is exactly what I'm looking for. Once I see this, it seems to me like they've cleared the way for a few more days of up move. So I'm just going to go ahead and set an alert like I normally would, and we'll share these alerts at the end. The high of today was 32.20, so going into tomorrow at 32.21, I'm going to call this, so I remember where I got it, washout alert. If this thing triggers on the open tomorrow, there could be some nice follow-through for a few days here. If you want to be really aggressive, you can buy these types of setups at the close. Would I buy a setup like this at the, the one we were looking at, HCA? Would I buy a setup like this at the close? Probably not, because it was up here earlier. If it closed up here, maybe you could buy that at the close, but it settled back down in the middle of its range. No reason to take an advantage on that. So that's why I'm setting these up for the following day alerts. So we've got the equity real estate logged in there for a possible trigger. And again, on these types of tails, typically in my experience, 2, 3, 4 days of subsequent trading days should drift higher. That's the thinking on this. So I like that one, EQY. We marked that one up. This one is interesting. It's got that tail that I tried to identify, but look at what's going on in the daily. I mean, it's just a mess of tails all the way back to here. Nothing going on here whatsoever. Don't even try it, in my opinion. This EQY is so much better because it's trending and showing that it wants to continue to trend versus something that's just stuck in a wiki trading range. Don't need that. FBC, okay, here's the last alert on the day. Again, we're towards the end of the day here on this history. But again, I'm going to drive this point home as to why we're using an alert and not a top list. This is another interesting one. Daily chart is making higher lows, trending higher. It's not in a sideways action. Really nice long wick. Matter of fact, let's just take a look at that here. Let's look at the single stock window, and I've got the daily range in there. Today's range, wow, 236%. So remember, we had that set at a minimum of 100%. So here's what a today's range of 236% might look like compared relatively to the other candles. I like it. It closed near the highs. It closed near the top. So we're going to go ahead and put an alert in here for tomorrow and see if we can take out the high of today, 2640. Go to 2641. And again, remind myself, washout alert. Even though I probably would know exactly what it was when I see it, it's still nice to give myself an understanding of what I'm seeing as I'm setting these alerts. All right, next on there, we've done FBC a few times, HSTM. Okay, this is what I don't like. HSTM actually was on this alert yesterday, but it gapped down and closed higher. But then today, just fell right back down into the range. What I really want to see are stocks that start up, not too much of a gap down, trade down lower, reverse midday, and move back higher. That's exactly what I want to see. Same thing with the one we just set, FBC. Starts up here in the range, drops way down, runs the stops, then moves higher. So that compared to just a long, giant gap down and trade higher, this is not as of much interest to me. So I wanted to highlight that for you. PEP, well, as you can see, I've already set an alert earlier on this one at the close. I set that one. I kind of like that wick. It came down. It filled the gap perfectly, as we talk about, and we will talk about some more this evening, filling the gap. So I have a working alert on that one as well. I'll just leave that one in play. HCA, I think we've already looked at. Again, the HCA gap down and just had kind of a large spinning top here, so not a whole lot to see on that one. So for the most part, FBC and EQY were the ones that I really liked on this history washout. Now I'm going to do one more thing and take a few more minutes here, and I think you guys are really going to like this. And then I promise I will share this alert. And you're probably going to want it after you see this. So again, I mentioned I dropped this info using 5-minute highs into an alert window so we can back test and see, what would happen if we held this thing for 3 or 4 days. So I've already went ahead and back tested the first one just to try and save time. And let's bring up that window. Do I have that window? No, that's not what I want. Where is it? I might have to back test it again. Oh, there it is. There's the odds maker. So I ran this and said, what would happen if we held this thing? Shoot, hang on a second. I've got to uncheck something so I can make that window move. Odds maker. Let's uncheck the odds maker. It's actually, sorry guys. Odds maker results, configure odds maker, that's what I need to get rid of. Okay, now I can play with this window. So what this window is showing us is that we had 2.87 profit factor with 320 trades over 30 days or so, a lot of trades, good winning percentage, but that's what it looks like. Big initial drawdown, but it's been doing better as of late. So here's what we're going to do. We're going to start with this and we're going to optimize it as I've done many times before, and this is just a lot of fun. As you recall, we can optimize by price. And this price heat map looks pretty solid here, nothing. But when I click into time of day, you guys don't really need much instruction to see what's going on here. the 30-minute intervals are showing us that between 7 o'clock Pacific and 8:30 Pacific is absolute crap, with the red heat map showing horrible returns, a lot of trades. So what if we ran this starting at 8:30 and let it run for the rest of the day? So this is the beginning of the optimization. The first run was at 7, so we're going to move it forward and clean out those hour and 30 minutes of crap that the AI odds maker module told us it was. And let's simulate a buy and see if we can improve. And this is what we call optimization. This is what Holly is doing a million times every evening. And it will allow us to compare what we got on the first run versus what we get on this run. Oh, and wouldn't you know, it's going nice and slow. Take a sip of my soda here. So while we wait for this optimized run, again, we can see on the thumbnail, it gives us a good description that we're onto something here. So we're going to let this finish because we're going from lower left to upper right. And here is our optimized strategy. We've cut it down to 232 trades from 320. We've gone from 287 profit factor up to 4.36 profit factor and 72.8% win. This is really nice, but we can't give it to Holly. Why can we not give it to Holly? Because when we run the strategy, you will see the timed exit is no longer up here in the intraday column category box. The timed exit was what happens if I hold this thing for market open plus 4 days. So it's really unusual to find a strategy that backtests longer than a day, and we found one here. And I'm really excited about it because this has always been a strategy that I really like. And now that I've found a way to kind of dial in and hone in on the filters on the Trade Ideas alert, the back testing is telling me, yeah, if you hold this thing for 4 days, you should be seeing some decent results. Is it etched in stone you're going to make money? No. But all we know is the information we have at current and the information from the past to help us try and see what happens in the future. So we could maybe even go a step further. I don't know. Let's see. Optimization. Well, we did our time of day. We did our price. Other filters. Let's see here. Change from the close in dollars. Well, I don't really see a whole lot of filtering there. Change from the close percentage. What I'm looking for is an anomaly with a lot of red that we can cut out. Relative volume, not seeing a whole lot there. Volume today, a lot of green there. So I'm not really seeing much else that I can really cut out, but I don't know if I need to at this point. I mean, this is a pretty solid strategy. If we look at our summary here, 4.36 profit factor at 72.8% win percentage. Those are the kind of scores that make the cut for a day trading strategy. Is doing her thing. So again, for those of you who have been clamoring for something a little bit longer term, that you don't have the time to sit and watch every tick of the tape, this might be something for you. So I'm going to go ahead and I'm going to save and share into the chat window. So the GoToMeeting chat window is the toolbar, and at the very bottom you'll see a plus sign that says chat. You just click that plus sign, the chat window will open and expand. And I am typing in here washout alert and pasting. So you guys would have that ability to take that alert and drop it through your cloud and tweak it as much as you like, but I'm real happy with the way this one's coming along. Again, EQY, great example. What was the other one that was a good example? FBC, I felt was also a good example. Not so much a good example, this big green bar here on a big gap down, that's kind of sloppy. So it's this kind of stuff that I'm looking for and setting alerts on. Anything you want to add, Andy, before we go and set some alerts and finish up?
No, yeah, that's a very impressive alert. 72%.
You've tried to back that stuff.
Oh my gosh, I can't tell you how many hundreds of hours I spent, back to. Yeah, that's impressive. I mean, and once again, you put your trader's hat on, just like the two that he showed you, and then that one, I guess it was HCA or something like that, whatever. But just put your trader's hat on. If you see it falling down, it's in the middle of its range, and you see a very sloppy action. Just avoid those. But he showed some really good ones there, and EQY, and what was the other one? FBC.
Yes.
Yeah. But yeah, that's impressive, Steve. As a matter of fact, I will be saving this to the cloud as well. So
good. Very good. All right, so rather than going through all of these, we're going to run short on time here, but this is my bearish piercing. I've looked at all of these, and the only one that I really found of interest that I saved to mark up in front of you guys was this Ross Stores. Ross Stores has had a really nice move, numerous days up, and then here's our little topping tail signaling possible blow-off. This thing could come back down to the 60 level, possibly, maybe a day type move, but the only way we're going to know about it is through the simplicity of the Holly Trinity, using our trade ideas alerts and AI and Holly, marrying them up to the footprints in the sand on our trade ideas charts, and then using our handy dandy trade ideas price alerts to set a nudge in the future, if you will, to let you know, hey, you were watching this, now's the time to take action, fish or cut bait. So the low on this one we're going to set at 61.22. I'll just go ahead and right click and then make that adjustment, 61.22. It is a short sale because the price is above, and I found this on bearish piercing. And that was the only one I found worthwhile on bearish piercing for maybe a day or two pullback. On the bullish piercing, only one as well. This is a GIII, where that's what it's called. Huge gap drop yesterday, and then a recovery today with a doji, meaning buyers and sellers were both equally weighted at the close. Well, if the high of today was taken out, I think I might like to know about this one because there could be a gap fill bounce back up here at some point. Very extended move, and we could see a dead cat bounce for a day or two. So again, the high on this one is 39.97, so we'll go 98, right click, bullish piercing. All right, that one is set. Yep. Let me take a look at my notes. So the remainder I've got off of the old handy-dandy trend change lubricant, which is really my go-to guy, especially when I'm looking for some short float type stuff. And I think we may have a couple here. AGIO at the top of my list. Of course, it's at the top of the list because we are sorting by short float percent. Short float percent on AGIO is 57, nothing to sneeze at. That can create a storm of short covering if they feel they're losing control. Well, let's identify a pivot level at which they might be losing control. Top of this wick right here is 45.87. Top of today's wick is 45.86. All right, well, let's go 45.88 and clear both of those wicks. We'll pop in here trend change lubricant, 57% short, and that is huge. We'll put some exclamation points in there. So that's all I really need to know to tell my future self if this thing triggers. There's a big short float contingency that may push this thing higher, and if it does get through, then you're probably looking at the next level of resistance up here around 50, in my opinion. So, maybe risk 50 cents to make $5. That's not a bad risk reward. EGRX, third down on the trend change lubricant. Here's the sideways nice type action, which we always talk about liking. And we've got a little bit of congestion right above these current levels, so we'll call that 47.48, 47.54, and 49. So 54 seems to be our high, so we're going to go 47.55 and make that an alert. Remind ourselves we found this on the trend change lubricant, and this particular one has 42% short. Very significant short float percentage still. All right, I got a couple more for you. Blue, right below it, still at 41%. Great. But this one's going to be a little different. We missed the boat. We missed the train. If you're going to be the guy who wants to buy this alert because it's big green bar and you feel safe and you've got a good, cold, warm, fuzzy feeling safe, well, I can tell you that safe feeling probably won't last very long if you buy these highs. But in the bigger scheme of things, it's breaking out and it's got a nice short float percent. Where might we want to set a pullback alert? I'm thinking right here. This level of high was a level it broke out from, so again, thinking prior resistance can become current support. That's a level of 53.19. Let's go on to the intraday chart here, and what do you know? 53.19 is just below this little hitch right here, intraday. So I don't think that's a bad level for a pullback alert. Let's just go ahead and drop it right there at 53.18, but we've got to remind ourselves it's a pullback alert, and what that means is watch the price action closely for a bidder to step in. These pullback alerts are not so much black and white like a breakout. They're more, rule of thumb, gray area, wishy-washy. But still, it would be nice to know if you can give yourself a really nice entry, and if you get alerted and see this thing pull back maybe on the open and running stops, but digging in right at that level of interest you were watching, Maybe you take a third position. Maybe you take a half position. Those are the ways you can start to think about scaling on an entry in parts. And the last one is PBYI. And again, it doesn't take much to see what I just said. If you buy up here after a gap 2, 3, 4 days of run, you're probably not going to be feeling warm and fuzzy for too long because more than likely you're going to get some sort of a nasty pullback. But the idea here is to maybe figure out where might they try and pull back that level to frustrate as many people as possible. And for that, I go to the 15-minute chart. Well, there's really two levels of interest. There could be this level right here, 44.28, and if it got even worse, we could have this level down here, but if it gets down to here, we may be even talking about, a complete failure and a gap fill. So I would look at this and say, if I was long right here, where do I not want to be stopped out? Well, I don't want the price to go below here because I feel like if it goes below here, I'm going to get stopped out. Well, flip the hat around, lower it, nickel, pop in a pullback alert, and maybe somebody else's pain can become your gain. TCL, but pullback alert, so watch price action. All right, so that is really all I have for the marking up of charts and price alerts tonight. And so, when those things trigger, what's going to happen on my screen is this is going to pop up, and it's going to be highlighted, and my notes are going to be staring me in the face right there. So we basically just created a few more working alerts here to add to this week's price alerts. Do you want to say something, Andy?
I noticed you called out a few biotechs there. I just wanted, keep an eye on the IBB because it is close to running into some major resistance or potentially breaking out. If you look at the IBB there on the daily, you can see. Scroll back a little bit. Yeah, you can see there on the So keep an eye on the IBB there because he did mention a couple of biotechs in there. But you can see if it gets above that that level there, like would be a triple top. But,
let's play pivot points.
Exactly.
Support, congestion, resistance, resistance one in the end, resistance. Yep. We're right there again.
Exactly.
So this IBB is kind of an interesting trade. Good point there, Andy. Thank you.
Okay.
All right, so let me put that back in its corral. And for those of you that have the price alert function, I'm going to go ahead and cloud share these and drop this link into the chat window, as we always try and do, and share some of our work, some of our homework.
Steve, we have to talk about PayPal too. Somebody just mentioned it. Trade of the week.
It is called Trade of the Week.
Trade of the Week webinar.
Yes. Gosh, thank you. Thank you. PayPal. Well, it was a couple of things. What do we have here? We just spent about 10 minutes talking about the significance of these types of washout hammers. And so this first caught our attention over the weekend. What also caught our attention over the weekend? Ooh, this hammer just happened to correspond with a pretty obvious gap fill. And for those of you who want to understand the significance of gap fills, well, look no further than our trade of the week about 5 weeks ago. Facebook was the entry right here only because it was a gap fill in an uptrending market and a very volatile market, so we were not comfortable calling out traditional breakouts. Well, this turned out to be the entry of the year for the trade of the week since in terms of the way the performance has gone since then. So again, you can look to have gap fills as an entry of interest. So two things going on there with PayPal over the weekend. We had this on Friday after earnings, plus we had earnings behind us like that. It's really hard to take positions in trades when earnings are coming up in 6 or 7 days and the trade doesn't do anything and it just kind of becomes a non-event. So we're not too far out of the money. I believe the entrance was right around here, 37, what was the open that day? 37.30 basically was the live trade, and we're just a few cents below that today. But here is the caveat. Here's what we don't want to see, people. The horseshoe, the dastardly inverted upside down horseshoe. I'm not saying this is going to turn into one, but it might start thinking about it, and that's what we don't want, and that's why we have our stop suggested below the end of that large washout wick and just below the gap. So I would not want to see this trade any lower really than 36.30 or whatever the suggested stop was, right around there. One other point of interest Andy and I have noticed over the years is we call these back-to-back days when you've got a wick to the downside and you've got a wick to the upside. It's just basically like wearing a propeller hat. It just shows you that the price does not want to deviate too much farther from this little general area in here. And this may take a few more days to work out. But I've seen this before, and as soon as I saw this close yesterday, I thought, okay, this trade might take a little longer to develop than we had hoped than, maybe the Solar City trade from last week, which, by the way, is still doing really well, sideways consolidation. If you guys have price alerts, it might behoove you to maybe set a price alert right above today's high, because that's the kind of thing that could continue to move higher. And I'll continue to point out some of the good trades. AKS is up actually, I think, 35% or so as of today. So we've been getting spoiled on some really good trade of the weeks moving our direction quickly. We may have to spend a little bit more time and be a little bit more patient on this PayPal. But again, I think you guys can see after the sermon and the discussion of the virtue and strength of these hammer washouts, the subsequent days can have a tendency to maybe trend higher. Didn't get it as soon as we wanted, but the trade is still intact. It's not much of a loser. We're just going to have to let this thing work itself out. I know eBay and PayPal are no longer associated, but we all know when you go to eBay, you use PayPal. So, I mean, at some point, this type of move in eBay, the great business they're doing, should translate a little bit going forward maybe into the next earnings, but that's a bit more fundamental than we normally like to talk about. We like to look at footprints in the sand, and that gap fill and that hammer washout bar was really one of the main reasons, and having earnings behind it was one of the main reasons we really like PayPal. I really like PayPal fundamentally as well. Use it all the time. All right, so let me go ahead and drop in these working alerts. I'm going to make sure I only got the ones that were created tonight. So the 27th, all right, there we go. So we're going to share 9 selected price alerts. For those of you who want to grab them, just go down to the chat window. I have just pasted the cloud link into the chat window, and I can have those exact same price alerts pop up on your screen. The same up on ours. Linda J., thank you so much for my oversight. I can't believe if I'd have logged off without seeing PayPal, I wouldn't have slept tonight. Thank you so much for that. All right, guys, that's all we got for you tonight. Let's bring Scott in and talk about some of the end-of-month specials that we've got coming up. Scott?
Yeah, why don't you go ahead and pull up that slide. Just to remind everyone, Trade Ideas is a software as a service company, so the core business we are in is subscription-based. And we have 2 subscription tiers. There's the premium, which brings you the artificial intelligence engine Holly, price alerts, red bar ignore, green bar ignore, the backtesting tool, the odds maker, other good stuff. And that starts at $1,888 a year. And you can also get that at $188 per month, and that features everything that we produce, including our all of our premium assets. You can also get in on the standard level, which is only $888 a year or $99 a month, and that includes all of the normal. It includes your it includes the scanning, the charting. It includes your exchange fees, and a lot. It also includes the hour of power one-on-one training, which also included in the premium as well. But if you use the code KEY2DRIVE, all caps, just like you see it with the number 2 in the middle, before the end of July 31st, you'll be able to take almost $400 off of your first year with Trade Ideas in the premium level. So you can get it for just $1,500 for your first year. Or you can use that same code to get your first month of premium for $150 for the first month. This code also applies for some smaller savings to the standard tier. You can go ahead to trade-ideas.com/price and just go ahead and plug that promo code in. You can also find a copy of this in the handouts panel on your GoToWebinar interface. If you'd like to download a PDF, just go ahead and click on the handouts panel to expand it. Download that PDF. You'll have that code there to remind you. Later on tonight or tomorrow morning, you're also going to get an email with a replay link to this webinar and a reminder about the sale that we have going on before July 31st. You can contact us, info@trade-ideas.com, or follow Steve at Today Trader, or you can follow Dan Merkin at Trade Ideas 1, or you can also follow us at Trade Ideas. We're also on Facebook at Trade Ideas Pro on Facebook.com. Email us with any questions, info@trade-ideas.com. Hey guys, thanks for the great presentation. Thanks everyone for joining us, and we'll see you at the next one.
All right. See you next time.